What's going on, everybody? Welcome to another video. So in today's video, I wanted to talk about volume and the multiple tools that I use to draw accurate supply and demand or support resistance levels that will act like a magnet where price really wants to come back to, and there's a high probability that the price will react off these levels once again. Okay, so before we get into the charts and show you the tools, let me just cover a few points on the slides. Okay, so let's get started. So volume is basically everything in the market. It's really what moves the market from price level to price level. It's just very simple. More buying volume, the price will go up, and more selling volume, the price will go down. Now, volume is usually just not in the move itself, in the move up or the move down. It is in the origin or the base of the move. And then price will actually return to those levels, and just we need to keep an eye on the strongest ones, as price might potentially react from it again and again if buyers or sellers are willing to defend that price level once again. So being able to spot these areas and trade from them will actually give you the highest probability trades. Okay, so there are two main tools that I use to find and validate the supply and demand levels. Tool number one is the fixed range volume profile. This just helps to draw the supply and demand levels accurately and according to the actual volume, not just based off candles. And then the tool number two is the session volume profile or anchored volume profile, whatever platform you're trading on or you're drawing the levels on. It will be named differently, but it's just a volume profile by price. Okay, so this is just to see the overall volume of the whole chart that you're looking at. So let's get into the chart and show you actually what I mean. So to see the volume profile on the right side, well, you can actually change it to both sides, but to mostly see it like on the right side and to see the overall volume by price levels, you can use a tool on TradingView called Anchored Volume Profile, which is a free. It is over here, and you go down and you can see Anchored Volume Profile, and then you can just literally click on that and then draw to whatever date you want to draw it to. So we can see it's quite uptrending on ES. So let's just draw it from this range right here, and then you can see all the volume by price, and you can adjust this depending on the number you put. If we put, for example, 100, you will just see bigger blocks of volume. So I like to keep it a lot thinner. So 500 is just a random number. It's just what looks good to me. And here you can see where most volume is transacted on certain price levels. So you can see this range right here is a high volume area. But of course, I'm not just going to draw these levels based on this. I obviously have my supply and demand rules on how I find and draw the levels. This is just a confluence to show me where the most volume is. So for example, we see a potential demand right here, right? We have an engulf, there's a break of structure, it broke multiple highs, there's momentum on this move up. So this for me would be a valid demand to be trading off. Now, if I want to see if there's actually volume in that area, I just take the anchored volume profile and I can just click to over here, and then I can see there is a lot of volume. You can see the volume is decreasing at a certain point in the demand. You can see this would probably be the most accurate way of drawing the demand, but I like to draw it also according to the candlesticks, to always use the same type of way of drawing my supply and demand levels. This is just an extra confluence. So here you can see that most of the volume is in the upper part of the demand. So if price comes back, there's a higher chance that price will actually react from the upper end of the zone and not so much from the lower side. Now, if we go down to the lower time frame, for example, the M1, which is where I want to see consolidation before the actual move up, you can see there was some downwards movement, then quite some consolidation, a little spike down, and the move up started. Okay, so the other tool that I use is the fixed range volume profile, which you can also find under the same section. You can find it right here, fixed range volume profile, which is what I have right here. If I click on that and I click on the whole range where the demand started basically, then I can look and see where the most volume is. So as you can see, we drew the demand quite decent, but then again, also with the fixed range volume tool, you can see that the most volume is, well, in the upper half of the zone, not so much in the lower half. Okay, and this is mainly because you can see this consolidation right here on the M1 time frame. This is obviously where most volume is accumulated, so that's why this area is with the most volume. So there is a chance that, like I said earlier, that price will react more to this part of the zone, this area right here, and not the whole area. But again, for this purpose, which which time frame was this? Was the M30? Yeah, it was the M30. I still like to draw my zones as I should, according to the candlesticks. But this is just a confluence to see if there's actually a lot of volume before the actual move up happens. And I will leave usually these tools, drawn. Actually, I would just leave them on my chart, and then I can see also the point of control. I can see where the most volume is. So if price just touches my zone, if it comes back, maybe I'll just wait for this higher volume area to be touched first and trade from that level. Okay, so that's a first example. Now let's take a look at another example. So if we go down again to the M30 time frame, what can you see here? You can see a rally, a base, and another rally. Okay, so this obviously for me would classify as a rally base rally zone. You can see as well that there is made of an engulf. It broke structure, it broke multiple highs, there is momentum. So all we need to see is this consolidation on lower time frame, but we already know that there will be. As you can see, this is the M30 time frame. We had 4 candles consolidating, right? So if we go down to the M30 time frame, M1 time frame, sorry, we can see all this consolidation, right? A rally, a base, and a rally. So this whole area right here would be a valid area to draw a demand from. So if we just go back to the M30 time frame, and we draw that level, the usual way that I would draw this would be from the open to the candle to the bottom wick, to the low of the candle, which would be like that. We can also see there's quite some volume in this area. Obviously, it's a big difference with, for example, this low volume area. So there has been a lot of volume at this area. Now, I want to see if I can draw this more accurately. And for that, I will use, again, the fixed range volume profile. I will draw it on the whole consolidation. And as you can see right here, we have drawn this demand where the most volume is. You can see there's the point of control as well, right in the middle of the zone. But there is quite some volume in this whole area. And then basically from the bottom right here, the volume starts decreasing a lot. But I still like all this volume over here, so I might just make my zone a little bit bigger. Maybe we can go down on the M15 time frame, see it a bit clearer. You can see there's still quite some volume from here. Okay, and then you see the top obviously doesn't have so much volume, so I wouldn't really draw my zone like this. I would draw it from here, okay, when the volume starts increasing a lot. And then from the bottom as well, you can draw your zone until the volume starts decreasing heavily. So this could be like this or like this, that really depends on you. But it's just important to really have the biggest volume in your demand zone. So usually I would draw my zone just smaller according to the candle, but since using these volume tools, they let me adjust my zones a lot better, to be honest, and more accurate. And also I would have less levels, to be honest, on my chart. I would just, instead of having sometimes 2 small levels next to each other, I would just have one bigger area, which is fine by me. If you don't like that, then don't do it. But this is just how I've been doing it more recently, and it's actually quite helpful to draw more accurate volume-based levels. Okay, and you can find these levels everywhere. So let's just look at another example. So let's look on the M15 time frame. Here, for example, what can we see? We can see a little drop, a base, and then a massive drop. You can already tell in the M15 time frame that there was consolidation for 3 candles, sorry, and then a massive drop happened. It's made of an engulf. There's a lot of momentum. It broke multiple M15 lows. So this for me would be a valid M15 supply to draw. You can also see that the volume is still pretty heavy in this level right here. So then all we need to do is drop to lower time frame to see if there's actually also consolidation on the M1 time frame. And as you can see right here, there's actually quite a range. You can see there's consolidation, a little spike down, a little bit consolidation, then a move up, and then a move down happened. Okay, so all we need to do now is go back to that zone and use our fixed range volume profile and see if we can maybe draw the zone a little bit more accurate. So we'll just draw it on the consolidation right here. And let's take a look. So you can see, I think we drew the zone quite accurately. You could make it a bit bigger if you want, like this, where the volume then starts decreasing. So it could have been a bit bigger, but all in all, this zone was quite accurate. Okay, so as you can see, this was a nice supply level where price just came in, and then obviously it went above, manipulated the highs, and then it had a nice move down. This might not look like a massive move, but if you can catch, a sell right there, you can still get like 15 to 20 point move. So, and obviously if you enter with a smaller time frame, entry like the M1 for example, or the M2, you can have a stop loss of 2, 3, 4 points and catch 15 to 20 point moves, which are very good RR multiples, okay, on a trade. So guys, really, I recommend you guys to use those two tools, especially the fixed range volume profile, to draw the levels more accurately, and obviously the anchored or the session volume profile by price, to see if the actual level or price area has a lot of volume, because you don't really want to be caught up in these lower volume areas, because price has been shown many times to just slice right through it. Okay, so yeah, keep an eye on those two tools, use them as well on TradingView or whatever platform you're on. See how it works out for you, if it helps you in any way. So if this video was helpful, just make sure to drop a like, maybe subscribe to the channel, and if you have any questions, just let me know in the comments down below. Alright guys, so thank you for watching, and we'll see you in the next video.